Good morning, everybody. Happy Monday. It's August 18th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We're coming at you a little bit earlier this morning, 8 o'clock Eastern Time. Great to be with all of you today. I couldn't wait to get things started after a kind of a slow weekend, slow news weekend. And, with having the markets closing week on Friday, I wanted to see what was happening today and get going. And listen, I can't wait till 9:30, opening bell. We do some trading. So as we see right now, the equity futures are down about 10 handles on the S&P 500. Dow Industrials down about 38 here. Could be down a lot worse if it wasn't for UNH, which is up a little bit this morning, up about $7 or $8. That's a big Dow component. NASDAQ is down about 50 or so points. Seeing a little bit of softness coming in as a result of. I'm gonna tell you right now, there's two things going on this week. Of course, Friday was a moderately big expiration day on Friday. It was a double witching that came through, and so there's a lot of people who maybe, like myself included, got stock put to them over the weekend if they had some in the money calls that were called away, or stock that was put to them with some short puts. So we're going to see a little bit of that being taken out over the first hour or so. But also tomorrow's big day. Volatility futures expire for August, and after tomorrow we become September. It becomes the front month. Now that's not necessarily a bad thing, because S&P futures basically rely on what's happening with volatility futures, and volatility futures are sloping upwards from the bottom left to the upper right, which is where they are right now. That is generally a bullish condition for markets. We do have a couple other things happening this week, of course. The one big thing that a lot of people are going to be watching is this, right? This is the Jackson Hole Economic Policy Symposium. And why is this important? Well, Chair Powell is going to be the keynote speaker on Friday, and it's going to be there Thursday and all weekend long. And they're going to be there listening to a lot of other Fed speakers, Chair Powell, some people from other banks. I believe the the EU central banker is going to be there, along with Japan and some other people as well. All this done, and then over the weekend they're going to be doing some fly fishing in Wyoming. But I want to just have you understand here that Chair Powell is highly unlikely, of course, not guaranteed, but highly unlikely to signal monetary policy at this meeting, right? He has made comments in the past that the markets didn't like, and sometimes he's made comments that the market did like. But they do have a committee that works together to craft monetary policy. The next meeting is going to be coming up in about a month, just before September options expiration. And he doesn't want to necessarily be the one calling out where policy is going to be, and frankly he shouldn't be, right? Because again, it's a committee that does the work. But the theme of this year's economic policy symposium, as you can see it right there on your screen: labor markets in transition, demographics, productivity, and macroeconomic policy. So the focus and the theme, I suspect, for Powell's speech on Friday is on labor markets, right? Could he talk a little bit? This isn't, by the way, this is not a symposium where he's going to be doing a Q&A for an extended period of time. Maybe he'll take a couple questions, but that's not what this is all about. This is about a lecture that he's talking about certain topics, and this main topic is on labor markets, right? So what could he talk about with labor markets? He could talk about wage inflation. He could talk about the slowing down of job growth that we saw in the last labor report, came out August 1st for July, and then the revisions down in June and in May. I suspect he won't be talking about the removal of the BLS commissioner. That's some political. He tries to stay away from politics when he's talking at these things. But I do think that he's not going to necessarily focus in on monetary policy here. maybe talk a little bit about inflation and maybe a little bit about what that hot inflation was all about last Thursday with the PPI and the CPI number, and then talking about how conditions have been getting better, right? With inflation, inflation is coming down towards their target. It's just not there yet. I don't believe that he's going to signal that there's going to be a rate cut. He's not going to signal there's going to be status quo here on policy. But again, you never know. I think the market's expecting to hear something, and if they don't hear anything, well, that's going to set up a huge sell on the news event. Now, we did have some news over the weekend with President Trump meeting with Vladimir Putin. They didn't really get anything solved there, other than the fact that President Trump wants to have another meeting with Zelensky, and that may happen today or maybe later on in the week. We'll see how that goes. But for the most part, as it relates to markets here, right? Let's take a look at the S&P 500. Hit a new all-time high last week, and it looks like it's kind of ready to pull back here and test some support. Where's the first level of support? I always talk about when the markets get extended to the upside, it's got to be the 20-day moving average. That's coming in at about 63.66 right now. That is about 75 handles below where we're at, a little more than 1%, but it's rising every single day. So that number is going to change tomorrow. 50-day moving average, if we want to get a little bit deeper of a correction, is down there at about 62.28. Again, rising every single day. And that is below the lower Bollinger Band over here. So it means that volatility is accelerating at this point. Look at the money flow here, right? We've seen a drastic drop in money flow in the S&P 500 from where we were in July. Huge money flows in July, supporting all the dips, but now we're at this low level over here. Now, I don't know necessarily whether it's the fact that people are away on vacation and their desks are not full, and the B team is being told to do no harm to client portfolios, or the fact that people are just simply waiting for what Chair Powell has to say this week, or they're waiting for what monetary policy is going to look like in about a month or so. So clearly, the market's liquidity is poor, money flow is stalling here. But we have seen the S&P 500 rising in the face of poor liquidity. So that divergence is not going to last for too much longer. However, we always do defer to the price action as the one indicator that we pay attention to at all times. So if prices are moving up, listen, that's what we have to follow, right? So as it relates to some indicators here, let's take a look at the oscillators here, and the oscillators went negative again. They were nice and positive on Tuesday after that big, huge rally. On that day, we were in plus like 88, 90. Now we're back down to minus 48, minus 21. Didn't take long for the oscillators to come back down. You see where we spiked up there and came right back down, and we're in negative territory over here. And why is that? It's because the breadth has been absolutely horrible for the past couple of days. And I can show you that here on this chart. This is the VOLD and the ADD. And notice now, we had the two strong days, Monday and Tuesday in the VOLD, also in ADD. Very good breadth on those 2 days. But then it faltered over here on Thursday and Friday, Wednesday, Thursday, and Friday. And we started up high actually on Friday morning and just saw the highs. It just became a selling event once the market opened on Friday. Now, other indicators over here seem to be rather bullish. We did have a decent ticks day on Friday, so lots of buy programs and sell programs. Makes sense, right? Because it was the options expiration day on Friday. Volatility seems to be looking towards moving up, right? Even though we're rather low, under 16%. Let's take a look at the VIX chart over here. Let's see if it's a budding uptrend over here. Well, no, not really. But on the VIX futures, it seems to be pointing upwards. We are at dangerously low levels on the VIX, right? It's at 1509 over here. And if we are below the 20-day moving average, which is bullish. We are below the 200-day moving average, which is also bullish for the markets. Bearish for volatility, bullish for markets. But as we continue to stay in this low area over here, let's call it 15 to 20%, even 15 to 18%, we're building a condition of complacency here, and markets are going to get smacked around. You're going to get these days where the volatility spikes like this in 3 days from about 18 up to 25. Or even down over here from last month. Remember, towards the end of July, we were 15, went all the way up to 21, and it felt like death for everybody, right? So those are things that we have to be concerned about. How do you counteract that? Well, you do three things at least: reduce your position size, hold a lot of cash, and hold some puts, right? So you can blunt any effects from future rises in volatility just by doing those three things, right? So I preach that all the time. So hopefully all of you guys are doing the same thing. So that's going to be it, everyone. We do have a minorly large weekend earnings coming out this week. We have Home Depot coming out tomorrow morning. Viking Cruises, Toll Brothers. We had a couple of good earnings reports from some other home builders. Toll Brothers comes out after the close on Tuesday. Target early in the morning on Wednesday, along with Estee Lauder. One of my favorites, TJX, is coming out as well too. We'll hear from Baidu, Analog Devices. Thursday morning, Walmart and Canadian Solar, along with Hovnanian, which is another home builder. Zoom, Workday, Intuit, Ross Stores on Thursday after the close. So a couple of big names in tech, couple of big names in retail, and we'll see how things go. Just kind of play it cool, play it easy. Step back a little bit after the market's open, see how things are moving, and keep some protection on, and et cetera, et cetera, et cetera. See you guys all back on Thursday morning. Have a great day, and I appreciate all of you spending a little bit of time with me today. And have a good trading day, and a little bit more from the Kings.